financial services stuff that might be going on. Because these guys, they're coming in pretty hot, right? Junta and Antoine.
Yep.
Really exciting night.
Yeah, totally. I can, looks like we're back on live. And recording.
Yay, okay. I did
Are
it.
we on?
Yes, we're on. Welcome everyone. Thanks for joining us from LinkedIn. Sorry about the technical difficulties. I know we're starting a few minutes late. Let me just get this link for everyone. And then, oh, cool. Thank you, Franco. All right, let's get started. Well, I just have a few intro slides that I like to start with. So I'm just going to get into it. If I can. All right, here we go. All right, well, thank you. Welcome, everyone. I know we have some folks on Zoom and YouTube and LinkedIn. So thanks for joining us. We're really excited about this session, this next Data Collab Lab session. We have 3 hosts with us today, and we also have our speakers here, Antoine and Junta. We're really excited to have you. So I wanted to give a call out to our Data plus AI online meetup group. So I know a lot of folks are joining us that are new. If you're joining us on LinkedIn, we have a meetup group, and this is part of that. So I'll drop the link in the chat, and I'd love for you to check out the group there and join us. That's where we announce all of our upcoming sessions, and we have a lot of really great content coming up. We have some AMA sessions coming up and some different demo series, and we also have Data Collab Lab, which has a few more sessions coming up, and we have different things planned for the rest of the year. And then also everything is recorded and we post them to YouTube. So we have a dedicated Data Collab Lab playlist, which is really awesome. And I'll drop that link so you all can refer to sessions at a later date. And then follow us on LinkedIn. So I wanted to quickly point to a podcast series that we're running. This series is ran by Denny and Brooke. So they're in their second series, and this series is about machine learning from research to production. So I think they have 8 episodes, and it is available wherever you get your podcasts. So again, another link, I'll drop that in the chat spaces so you can check that out. We also have a guest blog program. So the majority of our posts are written by engineers and folks at Databricks. And we'd really like to get more posts from the community and hear from you and hear what you're working on. So I invite everyone to check that program out. You can submit your idea with that button, or this is an open invitation to ping me directly. I work with the team who runs the blog and runs this program. So I'm happy to kind of bounce ideas off, or just let me know if you're interested in learning more. We'd love to hear from you. And before I pass it over to our hosts, I just want to do a quick reminder that the session is recorded, and I will drop the link to that in the chat. So it'll be available immediately after. So hopefully, we're welcome to reference that at a later date. And then we will be answering questions in the LinkedIn and YouTube and Zoom chat and Q&A spaces. So ask your questions, post comments, let us know what you think of the session. So without further ado, I'll pass it over to our hosts, John, Franco, and Lee.
Hi, everyone. This is John O'Dwyer. Nice to see you again. Thanks for coming. And we're really happy to have Junta and Antoine here today. Just to point out, I just wanted to say that I used to be a long hair along with them and also Franco. So I got a job, cut my hair, had kids, things changed, but still one at heart. Junta and Antoine are going to jump into some financial services topics here today. There's a lot of exciting things happening in that world around ESG, and really a lot of like what we do, where Databricks and Spark bring the ability to do extremely large amounts of compute and intelligence to the financial services and really services or like all industries in general. But in particular, it's really changing the dynamics of fintech in pretty exciting ways. So really happy to have them here and talk with them today about that. So Lee, why don't you go for it?
Thanks, John. Yeah, my name is Lee Blackwell. I'm a solutions architect here at Databricks. I got my start actually at a financial services company, implementing Cloudera Hadoop, like big data systems on the ground floor there. So that's where it all started for me. And it's been a pleasure joining Databricks and getting to be in the presence of these rock stars, Junta and Antoine. So we're excited to bring them here today for you. How about you, Franco?
Thanks, Lee. Hey, everyone. I actually spent a good deal of my time in finance growing up in data management techniques. So when I see what a lot of work that Antoine and Junta are doing, I get really excited about the application of them. And, you know, from what John was saying, I kind of had the reverse. I had never had long hair when I was younger. I did get married, had kids, but then I joined this company that was filled with data hippies. And I was like, you know what? It's time to grow my hair out. Because when in Rome. And with that, I'd like to introduce Junta.
Hello, my name is Junta Nakai. I head up the financial service vertical at Databricks. Thanks for joining us today. You know, I also didn't have long hair throughout my entire career. Actually, when I worked on Wall Street, I was very clean cut. I wore a suit every day. And when I left Wall Street, I said, you know what, I'm just never going to cut my hair again. So yeah, this is who I am now. And just going back to John's picture on your top right, like teenage John is my favorite John, by the way. I really love that picture. But thanks so much for joining us. Really looking forward to the session today.
And hi, everyone. So thank you very much for your time today. So Antoine, I'm really happy to be here with you today in my lab. So I'm Junta's technical counterpart. And therefore, I have always the picture of Junta in my lab. So yes, with the long hair team for financial services and making financial services fun. So yeah, no, thanks for joining us.
I also just want to call it, we have Spencer joining us as well in the chat, answering questions on LinkedIn. So Spencer, you want to introduce yourself real quick?
Yeah, of course. Thanks, Franco. And I have hosted a couple of these before, but I'm just going to be helping moderate today. I'm a solutions architect on the team with Franco, Lee, and John. I come from more of a consulting and professional services background. So I don't know where I fall on the hippie scale, but you know, whenever I was 13 or 14, I do believe I had like John Lennon hair on the Let It Be cover. So that's me. Happy to be here, everybody.
So there it is.
Amazing. So Junta, you want to roll us into what we're talking about today?
Yeah, so you know, the title of the session is obviously bringing Silicon Valley innovation to financial services. So I'm going to take a few minutes just to give you, you know, the lay of the land and how Antoine and I see the financial service business today. You know, what are some of the ambitions? What are the gaps between kind of that ambition and reality? Talent, recruiting, kind of the outcomes, and then ultimately talk a little bit more about the concept of ESG and sustainability. So I'm sure this is a term that you're hearing more and more about. ESG stands for environmental social governance, and I'll go into that a little bit. But you know, at the highest level, as all of you know, or hope all of you know, Databricks is one of the fastest growing companies in the world today. And financial services is one of our fastest growing verticals. So we have hundreds of customers around the world, and Antoine and I spend a lot of our time talking to them, really getting to understand, you know, where they are today and where they want to get to. And as is probably pretty obvious, there is a huge gap between the ambition of becoming more tech-like, more AI-driven, more data-driven, versus reality of where financial service institutions are today. So, for example, the average large financial service institution that Antoine and I talked to have roughly about 6 machine learning models that are fully in production today. And while that may sound, you know, great, there is a huge gap between financial services and other parts of the economy. So we have customers like Condé Nast that owns Vogue magazine that have well over 1,000 models in production. So, the world's largest banks have 6 models, magazine companies have well over 1,000. So there's this order of magnitude gap with the ability to bring machine learning, data to the fore. And that has real consequences. And if you kind of take a step back and think about yourselves, and you think about the way you interact with money today, the way you pay for things, the way you send things, the way you invest things, the way you borrow things, I'd argue that most of that has not changed for you probably in the last 10 or 20 years. So maybe there's incremental things about payments that have gotten much, much easier, but the way you apply for a car loan, the way you get, a mortgage, the way you invest, largely hasn't changed all that much in that, last 10 or 20 years. And there are real business consequences to that, right? So, if you look maybe 10, 12 years ago, that was obviously right before the financial crisis, financial services was the largest sector on earth, right? By probably a wide margin. If you look at the United States today, obviously IT is much, much bigger than financial services. So there are clear economic consequences to not being data-driven and bringing innovation to bear. And if you kind of double click on why that's the case, why is it so difficult to innovate in financial services? Why is it so difficult to move from data supported organizations to data driven organizations? It comes down to a multitude of different things, but it comes down to really talent and tools, right? And a third one I would argue is maybe time to market, but talent and tools are incredibly important, because if you think about what are the main competitive advantage for a financial service institution in the past, and what is it today? In the past, it would have been things like capital and scale, right? How many branches you have, how much money do you have in deposits? Today, the competitive advantage, or the source of competitive advantage in financial services, I would argue, is data, right? And it's people. And by bringing those two things together, there is tremendous economic benefits to that, but also can significantly accelerate innovation, right? And if you can take a step back, if you actually look at NPS scores or financial services, so NPS scores and Net Promoter Scores, basically how happy your customers are dealing with the products and services that you provide. Financial services as a whole, if you can imagine, is really poor on NPS scores. But on a segment level, there are exceptions. And actually the highest part of financial services, most of the time, is actually investment services. Okay, they tend to have the highest NPS scores, because I would argue that's the area of financial services where you've seen the most innovation in the last decade, right? So think about robo-advising, Robinhood type of apps, ETF investing, ESG investing, all these things have really proliferated in the last 10 years. That's to say, when you can drive innovation in your vertical, in your specific segment, there is outsized returns to be had, because your customers are happier for dealing with your services, and your stock price tends to do better over time as well. And I'll kind of go back to why that is. But I think open source is a critical component of attracting the talent and providing the tools to get to that eventuality, right? So MLflow, Spark, Delta, all the things that were invented here, and all the main open source technologies that Databricks is based on, is downloaded 30 million times a month around the world today. So there's a rich ecosystem of innovation. There's a rich ecosystem of talent that know how to use this, right? And if you look at kind of financial service institutions in the past, and many of them still are, they tend to have proprietary technologies with proprietary languages, right? And some of those technologies are decades old. And if you think about, what it takes to attract a young, star technologist like Lee or Franco or John, they probably don't want to work for a company where there's no career path. Because if you learn a sort of a niche technology in a unique language, that's just not transferable, right? So there's all these kind of practical consequences of doing that. The other part is that kind of that legacy infrastructure that kind of hinders financial services has real impact on innovation as well. So if you gotta take a step back and look at the biggest R&D spenders, research and development, R&D, research and development. So if you look at the top 100 spenders in research and development in the world, not a single financial service institution makes that list. And if you go by sector level, financial services ranks 11th in total R&D spend, right? So all that legacy, all the things that you need to just keep the lights on really hinders the ability to innovate and invest in new things. So all of this is interrelated. And where I'm going with this is I just want to quickly show you sort of a quick analysis that we've done is something called the Databricks 30 index. And I used to work on Wall Street for many years, and I still read quite a bit of equity research that all these Wall Street firms present. And I believe it was Morgan Stanley a few months ago who wrote this report that said, hey, companies that focus on data, cloud, collaboration, AI, automation, they tend to win, right? They tend to outperform the market. And they had all this analysis and they had this wonderful chart. And I said, well, that's really interesting because Databricks is cloud, Databricks is collaboration, Databricks is AI, right? Databricks is big data. Databricks is all those things that enable these companies to do those kind of things, right? So I said, if that's the case, our customers should outperform, right? And what we did is we created something called the Databricks 30 index. I actually wrote a blog about this. And if you're on Wall Street, I'm sure you're going to try to poke holes on all the different factors and constituents and biases and Sharpe ratios and beta and all this different stuff. But the punchline is that I took a equal price weighted index of the top sort of 5 marquee customers that we have in each of the verticals. And I simply plot that share price over time. And, obviously, as you can see in the chart, that those kind of companies have vastly outperformed their peers. And by the way, this is also true on a segment level, right? So if I look at just the financial service companies and I compare our customers and I compare them against the XLF, which is the financial service index, there's also a similar level of outperformance. So this outperformance in ways that you could slice and dice it, you kind of get to the same outcome in really in all the different verticals. And to me, what's really interesting about this is that you see the chart tracks pretty well until COVID, right? So in March 18th was the first US lockdown. And since then, that gap has widened tremendously. So think about all the reasons why companies go through digital innovation in the first place. That agility, that resilience, that ability to dynamically adjust business models on the fly. All those things that Databricks, I think, enable have come to bear in times of stress. And, crisis serves as a catalyst to bring the future faster. And I think this is one of those examples where this has certainly happened. And it's not just companies that focus on data and AI, and I will talk a little bit more about sustainability and ESG. These things are true for other types of kind of use cases and ways to think about performance as well. So ESG is probably a #1 CEO priority at every single financial service institution that we talk to. It stands for environmental social governance. It is basically a set of principled guidelines, data sets that CEOs want companies to adopt so they can do good, right, instead of just looking good.
So what would be one of these guidelines that people would instill?
Yeah, it could be things like, hey, we're going to be, carbon neutral by 2030, or we're going to, not do business with companies that invest in fossil fuels. Or we only, invest in companies that have one female or minority on the board. All these are fantastic guidelines and frameworks, but unless you have data, and unless you have the ability to verify, monitor, analyze that data, it just stays at the principle level, right? So ESG in a sense is, I should say, sustainability is a set of guidelines, principles, aspirations. ESG encompasses the data sets and the analytics that make that real, is kind of the way I would kind of position that.
I see. Cool.
And I'm going to hand it over to Antoine to kind of show you some of the work that we've done.
Before we do that handoff, I just kind of want to articulate one other thing. It was kind of asked in the chat. Some people are like asking a little bit more about this, but you kind of mentioned that different ways you could poke holes on this. And we did. I remember when you first started doing this internally, we were talking about it. And you did a lot of side analysis to kind of like prove out different dimensions of this. One of them that I really appreciated was you removed tech. Because tech is a big, heavy weight on these indexes, right? Like it dominates the market. What can you articulate? Just, I don't know if you don't have to present it, but just articulate a little bit. What happened when you removed tech from the equation altogether?
So that's a really interesting. Thank you for asking that question. Actually, the outperformance increased, right? So the way we constructed this index, I think, is relatively conservative because, as I mentioned, we've never seen as much concentration of success in the United States than we are today in history, right? Which is the top 5 companies in the United States account for like 20% of all market cap, right? That's the Facebooks, Amazon, Googles of the world. So in other words, because as I mentioned, this index is equal weighted, there's only 5 tech companies in there, right? Because it's one of 6 sectors, I only put 5. So, that means that tech only represents 16% of this index, whereas overall, it represents about 30% of the index. So it's relatively conservative in that. And what's really interesting is even if you remove that, or if you remove that tech, the outperformance actually grows. And obviously there's a fairly small data set, but there's kind of multiple things that I think we could read into that, which is incumbent companies that reinvent themselves, that pivot, that adopt new technologies can gain vastly relative to their peers, right? And I think there are good examples of this. I mean, at the high level, Microsoft might be a great example of this, right? Microsoft used to be the world's largest company 20 years ago, and then it became not the world's largest company. It actually became, far from that. And as they embraced cloud, as they embraced open source, and as they transformed themselves, they've now become the world's largest company again. So there are outsized gains to be had for being an early adopter, early mover in a respective industry. I think that's what some of the insights that you could take in from that analysis.
Yeah, this is amazing. It's crazy that this is the case. It's incredible to see.
And, and we've done a lot of work around ESG, and we do these similar types of analysis. Antoine will, hopefully show you that, we can say that, well, first of all, people care about ESG because investors care about it, regulators care about it, and consumers care about it, right? So if you look at all these McKinsey studies and all the other studies, people want to buy from sustainable brands, right? They want to invest with sustainable companies. So there are, dollars that go with this, and sustainability is such that, it's kind of like Santa Claus. It doesn't really matter if you believe it or not, right? It doesn't really matter if you believe in climate change or not at this point, right? Because the whole global ecosystem and economy is coalescing under the presumption that is true and investing in that direction. So if you're not doing that, you just get left behind. And I think that kind of forcing mechanism is one of the other reasons why we've seen so much C-level interest in the stuff that we're doing around sustainability today.
This just hits so close to home as your token millennial female here. I mean, it's amazing. Like, I as I said, I started working at a financial services company, and you're so right, Junta, you said it earlier. The averse, they did not want to adopt open source technologies, and that it was definitely a big factor in driving me away from the company. So this is just incredible to talk about. I'm excited to keep going.
Yeah. Awesome. Maybe I could,
ESG. Yeah, ESG. So, what did you say about Santa Claus? No, that's terrible. That's terrible. So in ESG is, as we said, most of the time we see broad guidelines, frameworks, principles, and difficult to quantify. And we believe really, the technology today allows you to mine for alternative data, alternative insights, trying to find some potential signals that could help organizations quantify those different policies, and being able to follow whether or not those policies have been executed, or if people just talk about this. So using data and AI, for me, it's the perfect, or ESG is the perfect playground for AI, of being able to really bridge the gap between what a company may be saying versus what company may be doing versus what people think about this. Now we have the ability to start streaming social media data, alternative data, news analytics data, and also combine that with unstructured PDF documents and broad sentences, and using AI to really help quantify really this walk versus talk. So the way we work here in the industry team in financial services, we can put technology first, and we can say, okay, here is Spark, here is MLflow, here is Koalas, here is Delta Lake, or we can look at all those technologies in the context of a specific use case. And for me, what a better use case than ESG that speaks to everybody beyond just financial services. When we look at retailers trying to understand the resilience of their supply chain, when we look at Are people trying to understand the ethical aspect of their investments? So there are so many type of use cases that could be done using the foundation of a data and AI framework for ESG. So let me just share my screen. I can quickly walk you through one framework that we've delivered through the use of notebooks, reusable notebooks, public notebooks that everybody can use. So we don't necessarily want to create yet another rating or score, but more about creating the framework that helps you quantify that ESG stance of any organization. So what you see on my screen is a simple example of Goldman Sachs, like every single public organization in the world today, are disclosing their sustainability report once a year. So that usually comes in the form of a PDF document. So you see 180 pages long document that shows you how great Goldman Sachs is. And I have no doubt, and that's really commendable. There are really great things here. But as you go through that document, you start realizing that there's not that much metrics to back this up. And in fact, when we look at those 40, 50 top disclosed policies, only 5 are metrics. Only 5, especially around environmental, can be measured, can be quantified. The rest, social, ethical, governance, are usually more broad policies statements. And what if we could apply AI to programmatically extract every single of those sentences, trying to categorize, to classify, to understand the vocabulary being used? And if we do so, programmatically, we can extract the intent, but then we can create that common taxonomy to be able to compare, okay, now Goldman Sachs versus Barclays, because now we speak the same language. AI as this conduit, as this kind of translation. So based on this, what we wanted to do.
Do you mind if I ask a question about that last piece? So is there a reason why you would want to do this programmatically as opposed to have analysts do that type of work? Is it a scale thing? Is it a bias thing? Is there a reason that would be a good way to go forward?
So first, I'm lazy, right? So that's the first thing. I don't want to go through 120 pages long document.
Makes sense.
And if I have 9,000 securities, I would need to go through 9,000 times 120 pages long documents. That's the first thing. The second thing is the human brain is not necessarily equipped to objectively quantify that unquantifiable policies. Is this policy better than this one? Those are different vocabulary, different words being used. Everything that a human being would be doing is more subjectively scoring those organizations. What if we could use data and AI to back those scores in much more data-driven, in a much more objective approach?
Makes sense. Thanks for explaining that.
Yeah. So this simple framework is just the foundation. We've seen the same framework being like extended to so many different organizations, so many different companies, to so many different data sets. So that just brings you the kind of foundation to a data-driven ESG framework. So first, how do we apply machine learning to extract all those initiatives and learn what I call that vocabulary? Once you get this, then you can start looking at a proxy like financial news or news analytics or social media and understand, okay, this is what you said about ESG, about supporting those communities. This is the same that was observed in the news, and that was the reception, that was the sentiment from the media, from the people, from the community you invested in. So this framework is based on a few notebooks, and I quickly walk you through this. So the code is all public. There's no point going through the Python code right now for the purpose of that demo, but just to show you what we do. So programmatically extracting those PDF documents, extracting each and every single sentence being used, and then learning those topics, those themes. So we show you how to start building your first baseline model that, again, you can further extend. The goal is when we say learning a vocabulary, if I feed a machine learning model with ESG-related PDF document, I will start learning ESG-related themes, topics. So diversity and inclusion, about code of conduct, around renewable energy. Those themes will be extracted programmatically, but consistently across all those organizations. When we do that, first, you can create that simple exec summary of everything you need to know about HSBC. This is what HSBC have been doing with respect to risk management, to energy transition. This is what Northern Trust has been doing with respect to community, to supporting community. So first, creating that kind of simple exec summary instead of going through 120 pages long. But what really, really struck me when we got first into that approach is then we can objectively compare those organizations, to your point, John. Now we can compare apples with apples because we have a common taxonomy that we've been able to machine learn. And this simple graph here shows you how framework like this could be used. If I have all my investments on the left and I have all those taxonomy, those categories that I've been able to machine learn, that gives me a quick view of the world of saying how much more Barclays communicate around the wellness of their employees compared to risk management. Or maybe Bank of America seems to over-communicate around supporting communities, but slightly less around code of conduct. So that does not mean that they don't invest in communities or support their employees. It means that as an organization, they have a slightly different focus to one vertical, to one sector. And this is what we eventually want to find that gap using news, for instance. So yes, any question?
Yeah, I was actually wondering if, and I don't know what the answer is, but did you find any of these specific initiatives and topics really lend themselves well to good investments?
Yes, absolutely. So what can I say on this? Some topics landing really, really well. Actually, if you don't mind, if you can keep that question, I think will make perfect sense. Exactly, perfect sense in what I want to show next. But just to shed some light, before joining Databricks, I was working at Barclays. So I can tell you from experience that Barclays really takes care of their employees. But if you look really at what they say in their statements, they don't seem to focus that much. And this is exactly that. This is this disconnection between doing great versus communicating. Some may be doing the opposite, greenwashing, saying, oh, great they are in environmental space, and actually nothing really happens. So that's this first foundation, this notebook. The second is once you learn that vocabulary, those themes, those initiatives, programmatically extracting all of this, can you start looking at things like, whoops, sorry. Yes. Can you start looking at other data sources? Like we use news articles, we use hundreds of millions of records for the last 18 months only from 60,000 news publishing companies that we can scrape in real time every 15 minutes. Why we will be doing that is now you can effectively have a real-time view of the world, of every single mention of an organization in real time across those themes that you've been able to machine learn. So the first was really the foundation. Now you know exactly what type of articles are you interested in. Those will be ESG specific. Those will be environmental related. Those will be supporting community related. Once I get this, let's imagine a simple sentiment analysis. If a company keeps being mentioned in the news alongside environmental disaster, it's obviously not great for your E-score. If an organization keeps being mentioned in the news around the great things that they're doing for local community, that's obviously bump up your social score. But if we do that right, it means that now with the data-driven framework, you no longer need to wait for a year to wait for an organization to tell you how great they are. You have a 15 minutes view to really understand how an organization acts. And if you do that, you also are no longer limited to the few organizations that publish a PDF document. I have access to every single small or large organization, financial services or retail customer, or any of those organizations, as long as they're mentioned in the news. We can start looking at things like graph and the influence an organization may have on another. So an organization doing business with another organizations directly related to environmental disaster. That's really bad. And that can be quantified using a framework like this. So building those relationships and trying to understand really how much a company talks versus how much a company works. So So finally, now we can look at this from an asset management perspective, as Junta mentioned. We can look at this from an operational resilience perspective. We can look at this from a reputation risk perspective. So here comes really the materiality. Why would the line of business care about those signals that you've been able to extract? So if I simply look at this from a market risk perspective and say, today, let's imagine I want to invest in those 20 or 30 different instruments, and I want to make sure that all my investments are sustainable and the right ethical company, the right environmental company. So I show you, this is a simple synthetic portfolio that we create. And let's see if there is indeed some correlation between ESG and market profitability, market volatility. So this is what we can do in the context of a market risk, and showing that, yes, apparently, if I split my portfolio, investing in bad ESG practices seems to be related to a higher volatility. So there is directly this performance, this market performance that is that goes beyond just the great things around supporting communities and investing for a sustainable future. It's also profitable as an organization, because people will start trading on this. There will be lower volatility, better margin. So this is an example of how organizations that we talk to have been able to incorporate an ESG framework into their risk management system.
Can you step back? Why would it be profitable?
So there are always some sorts of causation, correlation that's similar to the index that Junta showed you before. Mm-hmm. In my view, there is really this code of conduct of being able to operate your organization with the right framework, with the right code of conduct, the right investment, the right support, and doing great, but making sure that everything is following in your organization. That means more governance, that means more robustness, that means lower volatility.
Makes sense.
That would be my explanation.
We have a question coming out from LinkedIn. I thought it was interesting. From the perspective of, we're seeing that more and more investment is happening with crypto. And, obviously some popular thought leaders have gone to social about how not environment friendly that blockchain can be with all of how it consumes compute resources and exhaust. Have you come across any of that? It was a curious question that came up in the chat. I was just wondering, has including crypto or blockchain into ESG analysis come across your desk at all?
Yes, it has, and people are trying to quantify the carbon impact of crypto, right? So in some countries, it could be the #1 user of electricity, and you could argue if there's social benefit from using electricity in that regard. But that comes down to actually a data problem as well. So, people actually, this is similar to Tesla and how people think and invest in Tesla, right? Like Tesla, yeah, it's electric, but what is the damage that gets done to Bolivian lithium mines and mountains and recycling and all? So there's all these kind of second and third order derivatives of that where people are trying to understand. And the best way to go about that is using data, actually. And it's very similar to other types of investment processes where, an asset manager will take in lots of alternative data sets. It could be hundreds of alternatives. It could be, carbon footprint near how much emissions are in the air near factories, looking at satellite images of mines, and tracking that over time, looking at the, local health records of people who live close to a production facility or something like that, and they're incorporating these type of data sets to basically try to get proxies to figure out what the carbon footprint is. And there are lots of companies that produce these type of analytics actually based upon Databricks that they sell to their customers. Not necessarily crypto, but that's maybe that same framework applies. A good example is S&P Global. S&P Global has something called a workbench where they put all their ESG data into a kind of Databricks notebook environment, and they sell that to their end customer. So their investors can ask questions like, what is the physical risk properties of a company that I invested in? Like, how much carbon do they generate? How prone are they to flooding? And ask all sorts of interesting questions. That's all about taking new types of data sets and doing robust analytics on it. I think the same thing applies for crypto, because at the end of the day, people are going to start talking about, oh, we're going to fork it and we're going to do it this way. It's going to be much more green and stuff like that. That's wonderful. But again, it goes back to that conversation, which is how do you verify that? How do you monitor that? How do you analyze that, right? So that's where data comes in, right? So, without data, there is no ESG. Without AI, there is no sustainability. So those two things, in my opinion, have to come together to be able to answer questions like that and hold people accountable for that.
That was the mic drop moment. So without AI, there is no sustainability. Absolutely. Absolutely. And just coming back to the initial scope of that discussion around bringing like innovation in financial services, what you see here is just a notebook, right? So I was even like hiding the code, but the code is all here. But that means like some Python, some Scala, some R, some SQL. But the truth is, to really be innovative, an organization needs to be able to democratize those insights to the lines of businesses who may not be technologists, but who may be decision making. So how do you take a framework like this, write your data back onto a Delta Lake table and use your model using ML flow? But the idea is then being able to build simple AI augmented dashboards. So I'm interested in a specific organization. What should I know about that specific organization? What do they do? How much they communicate around ESG? So this will come from their CSR reports, understood by AI and compared with their closest competitor. And that will tell you this is how much coverage do they have for the great things that they're doing in the news that we can observe across all those policies that you've been able to machine learn using a framework like this. So to our point before about this more objective approach, this data-driven approach to be able to compare things objectively across organizations. Every single statement. So what did Ameriprise do with respects to renewable energy? Apparently they changed a lot of automatic lights, reducing heating and cooling during the evening. So there are plenty of initiatives that they've done that we've been able to classify, categorize, and quantify and compare. And finally, what would be this real-time view of everything that is happening that needs your focus, needs your attention because it has a positive or negative impact? What would be the materiality, being the market profitability, the stock price, being the volatility, or whatever measures, metrics that pertain to your business? So this is a way we've seen many organizations taking a framework like this, extending that to more instruments, more investment, more data, but democratizing the insights to the lines of businesses to do their job. So partially using AI on a back end, but I would say more about AI as an augmented intelligence, bringing all the contextual information you need from third-party and alternative data, but contextualized into a simple dashboard.
So what we're looking at, oh, sorry, Lee, go for it.
No,
you have a question?
I was just saying, if I'm a C-level, what decisions can I make from looking at this?
I mean, there's multiple decisions you can make. I mean, first of all, you want to understand how your company is being perceived over time, right? And not only that, because you can now bring in, the sum of data is going to be greater than the individual components. So if you have this data, and let's say you have the stock market data that Antoine shows, you could start to do really interesting kind of analysis, almost kind of materiality analysis of like, what does it matter? Like all the things that they say, how is the market, like how are customers receiving this through the sentiment stuff that Antoine is showing? How is the stock market receiving this? So you have two very powerful constituents that you could start to kind of quantify. The other part is to start looking at competitive dynamics, right? So I think we're going to go through this, in a little bit, but if I'm Coca-Cola, right, I want to know what Pepsi is doing. If I'm Toyota, I want to know what Daimler is doing, right? If I'm Apple, I want to know what Samsung is doing. And being able to quantify that is actually a very interesting thing. By the way, this dashboard is just an example of how this can be used, and there's more focus on investing, but there's a lot of practical use cases of dashboards, right? And I'll give you one example. Sustainability is a C-level priority. CEOs love talking about it, okay? But if you go down to the field, the site, if you go to a retail banker, if you go to a person who works on an oil rig and say, what are you doing today to enhance ESG for your oil company, right? They'll be like, what are you talking about, right? So there is this big gap between the CEO, the suites or the suits, and the site, okay? And the way to bridge that is by data. And I'll give you a practical example of this. We work with a customer who has, all the ESG data coming into a dashboard kind of like this, where the executives can see. That's wonderful. But they'll say things like, hey, looks like our electricity consumption in this factory in Iowa is 3 standard deviations higher than normal, right? And that will kick off workflows. So that manager of that plant will say, hey, you might want to go check out this machine because it's using a lot of electricity. This is where the rubber meets the road, right? Where data actually leads to action, right? And that starts with, at the very minimum, visualizing, understanding what's happening in your business or how people are perceiving you. This is kind of how the dashboard can be used.
Absolutely, yes. So conscious of time, and because financial services is fun, right? And we have all your attention. So as exactly as we say, as the materiality, as a CEO of a company, why would you care about ESG and how could you use a framework like this? So there are plenty of different examples. So let's get really to the ESG disco party today. And let's see, please, by all means, put all your answers in the chat and let's keep that really interactive. Oh.
Where's the music?
I think Franco's trying.
I think we have to mute ourselves so that Franco can play the music.
Good point.
Oh, okay. So I'll start with the question and then Franco, you just hit the song, right? So you may have seen that in the dashboard before, but if I take the top 3 most sustainable FSI using news and using CSR disclosure about being able to tell great things, but also to do great things around ESG, is anyone can guess what those companies would be?
So who are the 3 most sustainable financial service companies based on the basic analysis that we've done?
Bueller.
Put them in the chat. In LinkedIn.
So I don't monitor the chat, but let's see. Is there anyone who just brought us a few answers?
I'm gonna guess Goldman Sachs.
Ameriprise Financials, I showed you before. American Express and MetLife. So what struck me really with this, like the example of Ameriprise, they don't necessarily talk a lot, but they do great things. They outperform their peers with respect to everything that they're doing. So this framework like this would effectively help you find that gap. And similarly, being able to find those others, the laggers, who talk a lot and do nothing. So this is a framework like this that will help really organizations better quantify the sustainability of their investments, for instance. So I don't know if anyone has found that in the chat, but let's get this one. So it's an easy one. So Coca-Cola versus Pepsi. What do you think has the better sustainability? Because again, ESG is not just financial services. Every single organization cares about ESG. They have both ESG practices. They have both sustainability document released every year. But one may be outperforming the other with respect to those.
Let me play the
policies.
music. Let me play the music.
It's light.
It's too light. It's too light, but I get this still. And the winner is Coca-Cola. So you can see, and actually you can run that study on the notebook, on the dashboard, and see that by yourself, all the news, all the initiatives, everything that was effectively done in the last couple of years, and this disconnection or not that it may have between a CSR reports and news analytics. So one of the last one that is really, really close to my heart, as we said, is across industries. And across industries, if we say organizations talk a lot, do nothing, or do a lot and communicate absolutely nothing about ESG, if we take those 4 verticals, media, financial services, healthcare, retail, is there any chance we can find how consistent each vertical may be? So does media talk a lot and do nothing, or does financial services communicate nothing but do great things for the community? So who of those verticals is the most consistent between the walk and the talk?
So who walks the talk?
Who walk the talk? And
Drum
the
roll.
come on, the answer is retail with a funky perfect score. So retail and CPG seems to talk a lot and do a lot of great things. And then actually that makes sense, right? Because you need to monitor your entire supply chain, up and down your supply chain, trying to understand that all your different suppliers have ethical standards. You need to ensure the resiliency of your supply chain. So you need a framework like this to walk the talk. Followed by healthcare and financial services. Those are two slightly lagger in terms of communicating, over-communicating and underperforming. And media, which is far behind because no one cares about ESG in media. No, maybe, do we? I don't know.
Show
But
business.
anyway, that's the kind of analytics that you can do. So what's the materiality then? How do you act on this based on a reputation risk, a competitive study, based on sustainable finance and investment? There are plenty of different ways, but that starts with data, to a point. That starts with data, and that needs to embed AI in your core decision making.
Amazing.
Yep.
So all this, we can, like, if I was watching this, I can go and take this type of thing and implement it in my current company right now.
You start right away with the notebooks that are all public on Databricks, databricks.com solution accelerators. It just gives you the foundation with simple data sets, right? But then all those public PDF documents, those are all public. So then you can extend that framework, play with it exactly the same way that I did with the dashboard. I started with 20 PDF documents, and I'm now scraping the top 500 organization in the United States.
Yeah.
Do you see, have you helped people implement these types of things? And do you see them kind of tweaking, let's say like the sentiment scores or something under the hood? Like what do you see customization wise with these?
Absolutely. So I think two things. The first is starting with what I call that baseline model. So this is just a baseline model that helps you get started. And they've been able to further extend to a much more robust, much more modern techniques and much more complex NLP models off the back of this existing foundation. The second is streaming more and more information, more and more data. So the way I'm just bridging the gap between news and PDF documents, a lot have been starting to incorporate social media feeds, social media data. Because again, that vocabulary that you learn, now you can monitor what's being discussed in the social media around those specific topics.
Makes sense.
Not to mention meme stocks now. I mean,
Yeah,
you can
absolutely.
start doing a whole.
Is there a Python
whole
library
segment
for
on that.
parsing a meme?
We do. We actually have built a Reddit scraper to scrape Wall Street bets. We haven't released it publicly for a multitude of different reasons, but we do have something, and that is a real use case. Actually, when that was happening, a lot of these hedge funds, came to us because that was kind of that David versus Goliath thing where you basically democratizing access to information and to trading platforms really helped the average Joe retail investor go toe to toe with the supposedly the smartest and most sophisticated investors in the world. So it's really incredible to see people using a platform for a multitude of different use cases. And I think that advancing sustainability goals is a very noble cause that we play a small part in today.
Yeah, absolutely. On this one, on that solution, that notebook is using NLP to understand what does YOLO means, what does diamond hand means, why does like to the moon. I'm not a millennial. I don't know. Maybe I am. So why can't NLP help me on this? Yeah. That's a perfect example of using alternative data sets, advanced analytics to contextualize that signal in a way that I can act upon.
So you can make some attendees.
Attendees, yeah,
that's right.
Yeah, there's actually some incredible podcasts on the whole thing. I don't know if anybody's listened to those, but this has been an incredible and enlightening conversation. It's actually been a lot of fun. Thank you guys for this.
Yeah, absolutely. I mean, this is something that's really important to Databricks. It's really important to us. We care a lot about it. And it's great to help our customers in financial service kind of get to that next level of innovation and digitalization. But also it's really interesting to see, and it's really awesome to see the impact that they're making, either through reducing, carbon, or make sure they're doing business with, ethical people, all the way down to making sure that there's women and minorities on every company that these companies do business with. So we're super excited to be able to work on these kind of issues, and look forward to working with people who are joining us today.
Thanks so much, Junta and Antoine. Great session as always, and always awesome having the Data Collab Lab host team, Lee, John, Franco, and Spencer. So thanks everyone for joining us. I just posted the link to the recording. So the YouTube live link is also the link to the recording, which is convenient. So I hope you'll check out the session at a later date. I included some of the links that the team shared throughout their presentation. So feel free to check those out too. All right, with that, I hope everyone has a great rest of your day, and take care. Thanks so much for joining us. Bye.
Thanks, everyone.
Thanks for having us. Thanks. Bye.